I first heard about Bitcoin during the European crisis in 2012. I realized that this was a solution to a lot of the global financial system. And I wrote the first macro strategy piece on Bitcoin probably ever published in Global Macro Investor in 2013.
Hmm.
And it was driven by a friend of mine, Emil Woods, who's is very well known in the space, and Chad Cascarello, who are Global Macro Investor subscribers, saying, listen, you need to look at Bitcoin. So I looked at it. They happened to have started an exchange called ItBit, which is now Paxos, and I ended up buying Bitcoin. And I stuck a decent size in because my analysis was, it's at $200 now. If I back out the analysis versus the stock to flow of gold, this is worth $1 million with the gold at these current prices. Therefore, it's underpriced. I hadn't figured out anything else about network effects, but I kind of understood that this was potentially important. And I assumed that it would go to zero. So my downside was 200. My upside was 999,000, blah, blah, blah. And then I said, I assumed that I am a total idiot, which I try and assume most of the time. And therefore, I'm 90% wrong. So if the upside is 100,000 and it's $200, it's the best risk reward any of us will ever come across in our entire lives, and maybe one of the best risk rewards of all time. So I took that bet, right? Macro thesis, did the work, said this is probably a 10-year play, and I'm going to hold it. So first thing that happens, I put the position on, it goes up 100%. It goes up 100% a month and 500% in the next 4 months. I'm like, holy shit. I don't sell anything because I've got a long-term thesis and it's fresh in my mind. It then falls 85%, but luckily back to my entry level. So it gets back to 200. I don't do anything because I had a long-term thesis. And then I kind of forgot about it. And then 2017, it starts coming to life again and it's starting to scream higher. And now it's at 2,000 or 2,200. And I'm like, okay, I'm up 10x, which is good. My thesis obviously was a lot more, but I'd forgotten that because now the forking wars had started. And I suddenly thought, is this existential? Is this the S-curve moment where it fails? So I sold it. It went up another 10x to 20,000. I didn't worry about that because I'd made 10x and it was okay. It was a good trade. And I was worried that it wasn't going to be able to play out my thesis because of these forking wars. And then it fell 85%. I wasn't in it. And eventually I got in April 2020. And I can't remember what my average was. Call it 6,800 or something. And then I'm still long and then, rotated into ETH and did other stuff. But anyway, so great trade. One of the best trade of my life. I went back and looked at, if I just kept my initial investment at $200, I would have done, I can't remember the number, 5 times better. Even though the size that I added in March 2020 was massively larger than the first size
Interesting.
It still didn't work. I'm like, huh. And then I thought, okay, if I'd actually followed my thesis, which is when it gets very oversold and it gets to that kind of logarithmic, the bottom, the 2 standard deviations oversold of a logarithmic channel or whatever, if I'd actually just doubled my position every time, but not doubled it, sorry, just added the same amount as my initial seed investment, I'd have done like 25x. I'm like, okay. So what I thought was a great trade was actually a terrible trade because I didn't trade my plan and I didn't think about what I was trying to achieve. So that's leads into the question about, okay, the market sell off now. I'm immensely comfortable because I see the network adoption. I've got even more models to understand how this space works. I see how broad and deep the talent, the adoption, the kind of conversations that Greg and I have with people all the time, it's like seeing the future. So therefore, the volatility now, I've been adding as fast as I can, scraping the sofa for coins, anything, big picture, to put more framework that is robust and tested and is deep. I've done a lot of work on it. So I feel comfortable with the probabilities. Now, I love markets like anybody else. So I've got on my screen the real-time chart of ETH daily, weekly, monthly, and hourly. I don't even trade ETH. I just buy it. But I like the market and I look at the price action. And what I did the whole period was just didn't look at my P&L. So I have learned, and this is a new thing for me, how to disassociate myself with my P&L. Because if not, you're always thinking peak to drawdown or look how much it's worth now, as opposed to how far are we along in my thesis? Let the numbers take care of themselves over time. I'm learning that because, this is a hard one to learn on because the volatility is so high. But I've done it similarly. I mean, I had a very strong view in 2012 about the US dollar and the euro. I was living in euros, billing in euros. GMI was based in euros. I was living in Spain, and I thought, based on a bunch of work that I'd done, that the euro was going to fall over a long period of time, and it was going to fall to 85 cents. 82 cents was my target and has been my target since then. So I took all of my savings, which was a reasonable amount at the time, and stuck it all into dollars. Then to force myself not to trade it, I bought a couple of properties, one in Cayman and a small place in Miami, in dollars. So I couldn't, therefore, and I was now in the trade properly, and I changed the billing of Global Macro Investor in dollars. And that was a phenomenal bet because that was at 148.5 in the euro. Still hasn't got to my target, but it was there, So I've done it once, but that was easier. This one, Bitcoin's harder. Otherwise, I don't tend to have run so many really long-term, massively volatile positions. My positions are normally 6 months to 2 years.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.